back. You're watching Your World at 10. Now, as we've been telling you through the first half of this show, central banks in Japan, the Eurozone and the UK were in focus throughout the day today, while Japan's central bank unveiled aggressive monetary easing. The ECB and the BOE decided to hold fire. To discuss the impact of this central bank action on the currency market, we have with us Willie Williams, Director of Foreign Exchange at Societe Generale. Willie, thank you so much for your time. Let's start by kicking off with your opinion on what the BOJ did today by doubling its bond buying program to what, $77 billion a month?
Yes, I think that was a very aggressive action. Earlier, the last quarter of the year, when we saw dollar yen go from 76 to 94, that was in anticipation of what the BOJ might do. We saw the move stagnate as people were surprised, and they didn't really think the BOJ would be able to surprise. The market was wrong, and the 4% move that we saw today in dollar yen indicates that this was more than the market was anticipating, and that the Bank of Japan is very serious about attempting to reflate the economy.
I know you say this is more than what the market was anticipating, but do you expect the yen to continue to fall at the rate it has been over the last 3 or 4 months, or do you think most of the news is now priced into the yen?
I think will continue to see the yen weaken. Before, what we were witnessing was market participants driving the yen weaker. Now the BOJ is aggressively going to do the same. And I think you're also going to see other economies within the region have to react to what the Bank of Japan is doing, and therefore it's going to push all the Asian currencies weaker as they rush to try to compete or maintain their competitiveness with Japan.
All right, so give me go ahead. I want you to elaborate a bit more on that Asian currency reaction point to the weakening, or the further weakening of the yen.
Yeah, so if you take, for example, looking at Korea yen, while there's a lot of talk going on about North Korea, the move we've seen in the won is all predicated right now based on what's happening with the yen. There have been no bond outflows, and we expect the central bank to have to cut rates in Korea. However, the entire yen move, or Korean won move, is predicated on following the yen. 100 used to be a reach of a target. Now people think we could easily get there by the end of the month.
All right, what impact is this going to have on the dollar?
And I expect that move to continue.
Okay, what impact is this going to have on the dollar, Willie? Because we've seen some appreciation in the dollar above, at least on the index above 83 today. I imagine some of that is on the back of that big drop that we saw in the yen. How is all of this going to play on the greenback?
I think the dollar is going to continue to rally. We're concerned that the non-farm payroll numbers tomorrow might be slightly weaker than expected, but that's just a spring lull in the economy. The U.S. economy is outperforming both its Asian and European peers, and the dollar should continue to trade higher. That will have a negative impact on emerging markets, as we've seen with many emerging market economies selling off across the board, excluding those really in Latin America, which are being supported by their proximity and their economic relationship with the U.S. So I think we will continue to see the dollar trade higher into the second half of the year, in particular once we start to see more of the problems in Europe come to fruition.
Well, you're not discouraged by the recent trend of disappointing data that we've seen come out of the U.S., whether it's the ISM services number or the manufacturing number, or now 2 weeks in a row we've got an increase in jobless claims beyond what was expected. You don't think that adds up to some frailty in the U.S. economy, especially after the sequester kicked in?
I think we will see a slight bit of weakness in the U.S., but that's normal considering the strength that we've seen. So a lot of the GDP growth in the first quarter was predicated upon inventory buildup. We're going to run some of that down in the second quarter, but relative to how the rest of the world is performing, I continue to expect to see strong inflows into the U.S.
All right, we saw some interesting moves on the euro as well today, Willie, based on the comments made by Mario Draghi after the ECB monetary policy was announced. The policy itself was status quo, but some of his comments were considered to be dovish, hinting towards a possible rate cut in the months to come. Though, of course, that expectation has been unmet for several months now. What do you make of where the euro is headed?
I think we're going to see the euro trade lower in the second half of the year. However, I don't think that'll be because of rate cuts. I think the general consensus is that if the ECB were to cut rates, it really wouldn't do much to help the situation in Europe. What's going on in Europe is more of a fiscal story as they battle between helping growth or austerity. And I think it's pretty clear based on some of the things we're seeing in the periphery that growth is becoming a bigger concern than austerity. As we see France, Spain, Italy, so many countries are battling with their current fiscal situation. However, the austerity is really putting these economies in a pretty tough situation.
So what kind of levels do you expect the euro to drop to further?
I could see by the end of the quarter the euro dropping down to 122.
By the end of the quarter, you said...
The euro is the anticipation. Yeah, so therefore within the next 2 to 3 months.
All right. You spoke a bit about Asian currencies reacting to that aggressive weakening in the yen. I did want to bring up if you have a view on the rupee at all and where you think the Indian growth story is headed, what that means for the currency, and of course in the context of this yen weakening that you've been talking about.
Well, I think in Asia it's a tale of two stories. One is the regional economies have to figure out how to combat the yen weakness. However, Chinese data has been slightly stronger than expected. Australian data has been stronger than expected. So it feels like the region is doing okay from an economic perspective. The challenges going forward are how do you remain competitive and keep that growth going, with the U.S., of course, being the driver of the world. If the U.S. is going to do better, everyone else should. How do you keep that growth going? So I think that we're going to see places like India, growth is going to continue to do well. However, they're going to have a dilemma when it comes to the currency. It's been a favorite of investors so far this year for the high carry, and I think we're going to continue to see that as carry trades, regional carry trades continue to be favorites. So short the yen versus Korea, short the yen versus India, those are the type of trades I think regional investors are going to play. And now it'll be up to the central banks to see how do we keep our economies growing. There's not an inflation problem at the time, so therefore that will not impact the need to have a strong currency. The only case is how do you remain competitive.
Well, it's been up to the central banks for several years now. Willie Williams, thank you so much for joining us and giving us your fairly broad perspective on currencies from across the world. Willie Williams there is the Director of Foreign Exchange at Societe Generale. With that, I'm going to have to wrap up this edition of Your World at 10. Entirely out of time, but stay tuned. Up next is Markets Today.